Hey, what's up, guys? Hey, this is Christian Brindle with Six Figure Medicare Agent. Hope this video finds you doing well. And today, I got a really special guest here with me today, somebody that I got to meet in person about, about a month ago in Tupelo?
In Tupelo, yeah, back in June.
Tupelo, Mississippi. I got Jolynn Allen here with me today, and she's like very quickly. I've gotten to know her a little bit through my Facebook group, just like through messages and just post communication, things like that. But she's quickly become one of my favorite people once I got to meet her in person, and I just realized what an amazing business person she is and a powerhouse. And I was like, I gotta get you on a video and tell your story because I think it's so unique. Jolynn, how are you today?
Great. How are you doing?
I'm doing pretty good, although the light is just bothering me like crazy, but it's okay. It's okay.
We'll make it work.
We'll make it work. We'll figure it out. But so one thing I wanted to kind of start off was really kind of dissecting your background a little bit, because you're someone that has had a ton of success in the industry, but you've also had success kind of branching out in other ventures, right? Like doing other investments. Your husband has a gun business, a gun store. And so I just wanted to kind of dissect your journey a little bit. Talk a little bit about how you got into insurance. Talk a little bit kind of your upbringing and just kind of your background.
Okay. So I got into insurance by being the person on the other side of the desk. I had a claim years ago. I actually lost a family member, and all of a sudden I had to figure out survivor benefits, life insurance benefits, all of this sort of hit. And I knew nothing about insurance. At the time I was working in the tech industry.
Right.
As a research librarian.
Oh,
so that tells you anything about me. I was definitely a education-driven sort of nerd. We'll just call it that. And as a research librarian, I like to know everything. If I'm going to be affected by something, I want to know everything about it. And the insurance world just came crashing down on me. In 1 year, I lost this family member, and I was diagnosed with cancer.
Oh my gosh.
All of a sudden, every letter in my mailbox was insurance. It was either health insurance or disability insurance or life insurance. And I had no idea how insurance worked. I was in my early 20s and I hadn't been affected by it yet.
Right.
So in my research of insurance, I actually decided I wanted to go into insurance, and I left the tech world and at the time I became an insurance claims adjuster. So in my 20s, I was a claims adjuster, and then I moved over to insurance underwriting, which of all the things I've done in insurance was my least favorite. I can't blame you. And then I went back into fatality claims, which was tough because that's how I lost my family member, was a fatality claim. And so to be at that point, now the agent on the other side of the desk, I could relate to the people I was dealing with because I had once been them.
Right.
But fatality claims will wear on your mental health. It's just exhausting. You don't even want your phone to ring. So then I went into insurance auditing. So as most people know me in Southern Colorado, I was their insurance auditor for about 4,400 small businesses.
Wow.
And so I did work comp and general liability, liquor liability, and basically went around and traveled and saw business owners every day for several years. Decided at some point, those business owners started asking me questions about Medicare. They were approaching Medicare, and they would come to me and say, I'm a fairly smart person. I run a business. I've been able to figure out these other sides of insurance, but what the heck is wrong with this Medicare thing?
Right.
And they were just like blown away by the fact that you couldn't get all the answers in one place. The fact that most agents represented only one company.
Yeah.
That there were two systems and nobody could explain to them how those two systems work and why there was two systems. And so they were just mind boggled by it. And they would come to me and say, insurance, every agent in Southern Colorado. Is there someone you can send me to that can help me with Medicare? And being the research librarian, I basically sat down and said, well, I'll go research it. How hard can it be? And I helped 4 of them. And I got 3 different answers as to what plan fit them.
Right.
So I started realizing, I'm like, this is the strangest thing, that we have a program that's supposed to work with seniors, and they've made it so ridiculous that these people can't get straight answers. And mind you, this was 14 years ago now, so the industry's changed. But back then, if you wanted to talk to an agent, you ended up talking to one from every carrier, and very few of them crossed over. Right. And a good majority of them didn't touch Advantage. So for a senior to try to get straight answers, it was like a research endeavor. So me being helpful to them, I decided I'll start this tiny little agency. It's for friends and family only. It's not, going to be my main thing. I'm going to maintain my audit business.
Right.
And then renewals started hitting.
Yeah.
And I was like, wait a minute.
So your agency today started out as something that was supposed to be a smaller endeavor, just for friends and family. Mm-hmm. And once you started to see the potential of it, it started to grow. Is that right?
That's it. It was never meant to be what it's grown into now. Yeah. I actually fully intended to stay on the audit world. But it was just as if the auditing, I got into it at a great time when Sarbanes-Oxley was passed and Enron had their whole situation, and insurance didn't think it would affect them, and it did. I was very lucky to come into auditing at the best time I possibly could have. And then I was lucky again to leave auditing, sell out, sell to another company, and go into Medicare again, right at the best possible time. And so I've had good timing, we'll say that. But the Medicare renewals hit, and it made me realize I can do audits for the rest of my life. But if I don't do their audit next year, I don't get paid on it again. Right. And the residual side of Medicare made me realize there was a lot of opportunity there. And I had the opportunity to get out of the audit business and decided to take that. So wanting to play off my prior business experience, I sent all of my prior clients a letter saying, hey guys, I'm not going to be your auditor anymore, but I am going to go do insurance. And if you want to work with me in the future, you're welcome to. And I just had so many of them reach out and contact me. And I still to this day have about 2,500 of them as clients.
Wow, that's amazing.
It was very nice to be able to take one business and roll it into another.
Right.
But as things started to grow, I started looking into real estate. And that's been something that I've been in for longer than insurance even. As investments, and I decided to use the insurance industry and my success there to build a real estate portfolio that is built up of a lot of commercial buildings and some residential as well. But I approach real estate in a little different aspect than say a traditional real estate investor. We do a lot of what's called real estate syndication, which a lot of people confuse with REITs or real estate investment trusts, but that's not what we do. We do syndication, which is investing on a more localized level than investing spread out over multiple forms of real estate. So we actually have ownership in those buildings, not just in the percentage of the buildings. Okay. So And the difference, obviously, there is liquidity. I can't just cash out tomorrow and take my wallet and go home. Right. I'm responsible for all these buildings. But I figured out years ago, a lot of people would refer to it as velocity or accelerated banking. Yeah. And I got very good at paying properties off very quickly and using especially when I started having large AEP payments, using AEP to acquire a new building almost every year.
Wow.
And so what a lot of people don't realize is that we have, as business owners, so many of them are afraid to look at financing. They think, oh, I'm self-employed, they won't finance me. And it's really not true, but most likely they're looking at the wrong source of financing.
Right.
So I don't work with.
If anything, it just adds a few extra steps. Would you agree with that?
It does, but it maybe changes your sources too.
Right.
Like I quit dealing with big name banks. I don't like big name banks. I like little community banks or credit unions that maybe they still meet on Friday and they have a little committee that decides if you get your loan or not. If they're that small, that's the kind of bank that self-employed does the best with. And so I started working with these smaller banks that, like I said, they have a committee on Friday and they decide if you're credit worthy or not. And started financing buildings, but I was sort of creative in how I financed them. I always offered more than what the person was. Let's say it was a $500,000 building. Yeah. I would offer them $535,000 with $50,000 back at signing. So I would put my income in, and then I would end up getting money back at signing, which I would promptly use to make sure that building was up and running, and then take my own funds back and go back out into the next endeavor. So I did a lot of the creative financing in those early years. And back in, 15 years ago, you could still write off HELOCs. You could still over offer on properties and then take funds back at closing. So there was a lot of things that you could do then that some of those things have been tightened up on now. Yeah. But a lot of those are still allowed. They're just maybe not tax deductible like they used to be.
Gotcha. So can I ask a follow-up question kind of to that?
Sure.
So with you running, so it's from what I've been able to gather just through kind of getting to know you, it seems like you run the agency and you run the real estate business. And then I believe your husband kind of runs the gun business. Is that kind of how it all works?
Yes. So a few years ago, we decided he was going to retire. So he is retired in his 40s, which I don't actually recommend to people. It drives me crazy. But out of that, he decided he wanted to get into the gun business. He did go back to school and become a gunsmith, but he doesn't do a lot of that other than building for himself. He started an online, it's now an online gun store. So he's an FFL, Federal Firearms. And so we tie them all together. So essentially we have an insurance agency, we're an insurance upline, then we have real estate, and then we have guns, and then we have other investments.
Right.
And one of the reasons the gun business came about is because of all my Medicare clients. If you really look at today's Medicare customers, they're not like Medicare 20 years ago. They're not at all. They are still active. They actually
they're on TikTok.
They're on TikTok. They hold the majority of the country's wealth in investments. They hold the majority of the real estate, and they hold the majority of the guns. They have some of the biggest collections that I've ever seen. And, when I'm talking to like 30-year-olds, they may have a couple, but some of these 70-year-olds I know have $3 million gun collections.
Right.
They've been building it their entire lives. And what happened is I started doing, I have a PNC agency as well. And in my PNC agency, people would come in and they would say, well, yeah, I want to insure my home. And I'd ask if they have any collections. We'd talk about their gun collection. That's, $400,000 and they don't have it insured. And through that conversation over the years, I started realizing if I wanted to go out and buy guns, if I go buy them from a store, it's a whole different transaction than if I go buy an entire collection from someone.
Right.
And we have a lot of people turning, they're like 85 years old and they've got a 2,000 gun collection and they have no child interested in guns. And they have a wife who maybe has no idea. You can't tell the difference between this black handgun and that black handgun. This one's $250. This one's $2,000. They don't know.
Right.
So it was kind of my idea to spin off the gun business just because of the fact it was something that Jason could do in retirement. And we had about it. And we had an easy source of being able to purchase large amounts of inventory all at one time.
Right.
So I started sort of just advertising it out to my Medicare clientele, and then they told their friends. And so at this point, the majority of the guns that come into our business are coming through seniors, whether they're ours or someone else's. Some of them might even be your insureds, because we get sent all over the country to go buy collections.
That is so cool, because I've always preached to people that if you're going to add maybe another layer to your business, or maybe you're going to add another business in general, there should be a way that it can be tied to your main business. That's my opinion, because I feel like if you have like a big tree and it has different branches that connect to other things, it might be a little bit easier to run than maybe planting 5 or 6 different trees that have nothing to do with each other, right? So like the businesses end up connecting and they support each other, they help each other. And that's what I'm hearing that you've been able to really build out and structure in such a way to where, your insurance agency helps support the gun business, your insurance agency helps support the real estate business, and they all kind of tie together. Would you say that's an accurate representation?
Oh yeah. No, they're definitely tied together. And even in my last real estate transactions, 3 of my last 5 have been Medicare clients that were selling commercial buildings that they no longer needed. One had a spouse pass away and they didn't want to continue operating the business, so we bought out her business. The other was retiring, moving to Arizona, so we bought out her commercial building. So even in that aspect, on all sides of it, it's like we work with them on Medicare, and then we are working with them on real estate, and then we're working with them on the gun business. The biggest thing that's helped me is that I'm marketing to the same people. So I don't have to pay triple the marketing expense. I basically am sending these things out, and I can send them something with Medicare, and on the bottom of the newsletter, I have something about, if you know someone with a gun collection. And in conversations I have with those customers, one thing I encourage you guys all to do is have real conversations about their plans and their retirement and their assets and what they're holding on to, and actually approach them as if you would any other business opportunity or business person. And you will uncover so many things that the Medicare beneficiaries we work with have their hands in that you wouldn't consider them being part of.
Right.
Because they own the building lots that you're considering, and they're not listing them. That's the other thing. So many of these assets are out there and they're not publicized. So the last several I've talked to, they weren't even listed.
Wow.
And even the building I'm headquartered out of, my headquarters building was a funny circumstance through 3 different Medicare beneficiaries. At that time, I had a building, I needed that location. So I had a building I was temporarily renting. And I got in an argument with the landlord because he just wasn't doing his job well. So I got in an argument with the landlord about a safety issue. And then 3 days later, one of my insureds got hurt. And it brought out my red hair temper, which is a thing. I'm not even going to try to pretend that's not. I'm like a totally calm person until someone harms somebody else or doesn't do what they're supposed to do. And my customer ended up getting hurt. And I posted on Facebook. I was like, I want a building in this town on the north side. Super frustrated, not dealing with this real estate company anymore. The next day, I'm in a meeting with a Medicare beneficiary. He's turning 65. Another Medicare beneficiary of mine, who was a realtor, walked in the door and said, here's all the buildings for sale on the north side. And I'm like, great, thanks. I'm in a meeting. I'll call you this afternoon. As soon as he leaves, the guy I'm in the meeting with says, I didn't know you were looking for a building. And I'm like, well, I have been for about a day. And he's like, hey, there's a building down the street. Our other client of yours, he's like, you know him. He just bought it, but it's not on the market. We called that customer. 15 minutes later, I'm looking at a building, and the next day I'm buying it. So without those 3 Medicare beneficiaries and us having that conversation, I wouldn't own that building. And it's one of the best ones I've ever bought. It was a fabulous deal. And it never touched the market. Actually, while I was remodeling it, people were coming by saying, when is this going to go up for sale? And I'm like, too late. You missed that boat.
Yeah. I've always heard about real estate investing. And of course, I don't know 1% of what you know about it, but what I've always learned about it, or what I've always heard, is some of the best deals get done behind the scenes before anything ever gets listed, right?
Oh, yeah.
And so this kind of sounds like an example of that. Like, the deal was able to be struck before it ever even hit the market.
I would say the majority of mine are that way. I think on my current inventory, I think only one of them was listed on the market. All the others have been behind the scenes, just knowing the right people, asking the right questions. I very rarely am I going to go buy something that's listed with a realtor. And in having those conversations too, like the one I'm working on right now, they're selling, it's a piece of land. It's just a piece of land, but it is very conveniently located to a Social Security office.
There you go.
So you can't get to the Social Security office or from it without passing it.
I love it. I love it.
So I'm looking at this deal, and it's a not advertised deal. That's how pretty much the majority of them are. That's also how you work with the bank and getting their good favors. They don't even ask the questions they used to ask. And not that, the other thing I would encourage agents to do, so many of us only have our entire credit history on our personal side. And it's very important to actually build up the credit on your business.
Right. And that doesn't get talked about enough. You should have business credit cards and lines of credit in 9 yards.
Not on your Social Security number. You need to have it on an EIN number, and you need to have a DUNS number. And I talk to agents all the time. I'm like, do you even know, especially when they want to buy a building, and I'm like, do you even know your DUNS score? And they're like, I don't know what a DUNS is.
Right. And talk about that for a second, right? Like, if anybody, I'm sure tons of people will see this and they'll be like, what? Talk about that for a second.
DUNS score. So that's basically your business's credit score. And it's completely opposite of normal credit. And it's completely independent of your Social Security number. So if you're going to build business credit, you want to make sure that it's not all built attached to your Social Security number. And where this becomes a deal, in the future, if you're trying to build something big, if your personal credit lines are maybe tied up completely in your mortgage, you don't want to lose out on opportunities because you never built up your business credit lines. Especially in the last couple of years, being able to access business credit is easier than it's ever been. Right. And one of the reasons I can pounce on deals that other people can't is because I basically have a revolving business line of credit that if I had to come up with $250,000 to buy a building tomorrow, I can actually just access that line and I have it done. Right. And so one of the best things that you can do in an opportunistic standpoint is have one of those lines of credits on your personal side and one on your business side. And they're independent from each other and don't interfere with each other. So
two separate entities almost, like
completely. You don't want your business to be tied just to you. You actually want it to be completely separate from you. And the other thing is, when you're building this stuff up, you need to consider that we live in a world where people will take from you if possible.
Right. And you let them.
Yes. So you want to build everything on what we would refer to as like a lawsuit prevention entity. When this little sleazy lawyer that's going to, research you pulls up your account online, which takes them 15 minutes and they pay a whopping, $20 for, it says everything you own. And you want that report when it pulls up your name, when it pulls up Christian Brindle, you want it to say you own nothing. You want to be broke on paper when they pull that report.
Yeah.
You want all that stuff in lawsuit prevention entities out elsewhere so that when they pull it up, a lot of lawyers, here's the thing, it is free to sue someone. It is not free to defend yourself from a lawsuit.
Right.
That's why we live in the world we live in. A lawyer can look it up, and if it says Christian Brindle's worth XYZ, he can do the math side. He can get 30%. And if that's worth his time and effort, next thing you know, Christian's getting sued.
Mm-hmm.
You wanted to say Christian owns nothing and Christian's entities own everything. And one of the ways to do that and successfully accomplish that is for your businesses to have their own credit that is not tied to Christian's credit.
That is such an amazing tip, and it's so smart and it's so savvy, because in today's day and age, I mean, there's really no criteria for what you could be sued for. You could be sued for literally anything.
You can be sued for existing. That's it.
Right. Like you can be sued for, not marrying a transgender person or something crazy like that, right? Like it just could be anything like that nowadays.
And the hard part is like you have to pay to defend yourself. That's the worst side of our system. The other thing is we don't want to
demonetize because I said that.
That's something bad, right? You can't. I guess the way I always look at it is you have to be prepared for those things to happen. And one way of preparing for that to happen is to set yourself up accordingly in the first place. I meet so many people who don't even think that through until they have received papers and something bad is happening. And now they're trying to figure out, how do I fix this? And they go into defensive mode instead of preventative mode.
Right.
So yeah, as business owners, set yourself up right from the get-go. That's one thing I do with my agents is make sure that they're addressing it from the very beginning. And I have the advantage of, the economics degree and all of those things that have helped me be successful in business. And when I'm working with agents, a lot of them sit down and we're having a conversation, and it's not all about insurance. It's about getting yourself set up correctly, getting yourself in a position financially to be able to survive the first 5 years of being in insurance, and making sure that you're not in a situation where everything's built on an unstable foundation and one little thing goes wrong and your career's over because you made a misstep.
Right.
And I have agents. I had one last year that came to me and said, I'm in a bad situation. This is what's going on. We actually sat down, figured out how to fix it. I got her in touch with one of my contacts, had it fixed within 3 weeks. She was in a god-awful mortgage that was killing her and couldn't get out of it because of something they had co-signed on. 18 months later, we had her not only out of it, but we had the house paid off free and clear.
It's awesome.
And it was something that was, not insurance related. But here's the thing. If I can help my agents be secure on the home front financially, they're more likely to survive those first 5 years of insurance, because that's why most agents quit in the beginning, is financial constraints.
Right. Absolutely. Absolutely. So there's so many things I want to cover with you, and I want to make sure that I am respectful of your time. So follow-up question a little bit. I want to shift gears and take it back to the businesses for a second. So the real estate business and the insurance agency. What does your day-to-day typically look like? How much time do you spend on each? Is there like a balance between that? I know that you have employees for both, and I know that it's more than just you behind the scenes of things. But what does Jolynns day-to-day look like? Right? Talk to me a little bit.
Yeah. So on my day-to-day, I'm usually caught in the middle of the Medicare business, the P&C agency, and the real estate. I'm kind of hands-off on the gun side. That's Jason's baby. But yeah. I split my time between those three. Medicare is my primary. The P&C agency, I have a couple of P&C agents that basically operate that on the daily basis, and then I'm just overseeing, and I'm mostly doing the contracts and the commissions on that side. On the real estate side, I am the hands-on as far as finding the deals, financing the deals, putting the deals together. Then after that, as far as collecting rents and all of those other things, that's one of my sons, Jonathan.
Okay.
So I have two boys that are involved in the business. They both went to CU and got their insurance and risk management degrees and then came home. So I'm blessed to have those two, little early 20s that are helpful with it. But as far as the daily basis, I'm giving direction to 3 people. So we're a very small team for the amount of what we accomplish. And We're also very hands-on and very long hours. That's one thing about this team. But we basically about live at our office. All of our businesses fall under one building. They're all in one headquarters. And I have my husband on site at one business and my boys on site at the other business. So for us, our family revolves around the fact that we run these essentially 5 separate entities together. So we have very few people in the upper levels that aren't family.
Right.
And then as far as the 8 offices that we run, there's a manager at each of those. So someone's in charge of them. So my main goal is to just stay in touch with those people that are in charge of those offices. And then I rotate on a schedule that says, like yesterday I was in La Junta, Colorado. Today I'm in Colorado Springs. Tomorrow I'm back in Springs. And then next day I'm in Pueblo. So right. I'm on a rotating schedule throughout the month that I'm out there. But on the offsite offices, I'm only there about 2 days a month.
Okay. So it's fascinating. I was fascinated ever since I got to meet you, because I didn't really understand the inner workings as much of kind of your organization until we got to meet in person. And then I was fascinated about it. So your agency contracts a lot of agents, right? Like you've worked with a lot of agents, you have a lot of experience working with agents. Before we actually started the recording of this interview, we were talking about something that was like super interesting to me. And you were talking about something that you walked away from 8%, I think it was last year, the year before, that really kind of impacted you about agent retention. And talk about that for a second, if you will, because I found it very insightful. And I think it's something that a lot of people that are trying to recruit and build downlines probably need to hear, because one thing that I've always been of the philosophy of is agents have to meet you halfway, right? That's got to be a 50-50 thing. Anytime you're coming 60%, 70%, 80%, it's going to work out badly for you because you're doing some of their work for them, right? It's got to be a 50-50 thing. It's got to be a mutually beneficial relationship. Talk about what you learned and kind of the situation before and after that we were talking about before.
Sure. So before I went to 8%, and obviously I've been bringing agents on board for 10 years now. So 10 years ago, I wasn't as choosy about the agents I work with. I'm a lot more selective now. But back then, I believed anyone could do it. So I took on anyone who came to me and decided they wanted to become an insurance agent. And I did so much hand-holding. I literally drugged some of them kicking and screaming to succeed. I was like, you will do this, you will succeed. And so I was running at my 5-year success rate on my agents was at a little over 60. It was right at 67%.
Which is ridiculous.
It's insane. So I go to 8% and Cody's standing up there saying, 92% of agents fail. And I'm like,
they do?
Heck?
They do?
So it was mind blowing to me because I'd never been told 92% fail. I was like, this is the easiest industry on earth. How do you not succeed? And had no idea the fail rate was anywhere near that. But then leaving that, I'm talking to other people building a team. And the common theme I kept hearing is they were like, you're either doing something really, really right, or you are doing something incredibly wrong if that's your success rate with agents. And what I found out is it was a combination of both. I was putting in so much into their success. I was even taking away from my own. And right. I was taking the burden of their success so much on my own plate and drug people to being successful. I gave away, I can't even count the thousands and thousands of dollars in leads and shadowing. And I had agents on board and I love them all to death. But those early agents, they were spoiled at my own expense, very spoiled. And if they, and a lot of them will actually just come out and admit that. So they know they were spoiled.
Good. That's good. Because sometimes when you spoil an agent and it's obvious to everyone but them that they're spoiled, they still feel like they're entitled, right? So they're just, they have this sense of entitlement to them to where they're like, oh, I didn't get enough, or I'm not getting enough. And so the fact that they realize that, to me, is definitely a positive in this whole thing.
Yeah. And I'm not going to say all of them were that way. There's definitely a few that had no idea how much I gave of myself to make them successful, and maybe will never appreciate it. But at this point, I have changed my philosophy a little bit. I don't just take on any agent. I definitely have changed my recruiting. In the past, actually, I didn't really recruit ever. They came to me. Most people came and found me. But I've changed my attitude towards that. I still baby the heck out of my agents. My agents are in my physical offices. They don't pay rent. And they have access to 8 offices in their area, rent-free. They have marketing support. They have, a team of people who actually support them and answer their questions. And the majority of them love and appreciate that. And they understand that the system I've built behind the scenes is the reason that can exist.
Right.
The fact that I actually own, what I would describe as like a net zero real estate portfolio. So I don't buy single property homes, single property residential or single property commercial. And my single property commercial is the only one I have is my headquarters building. Outside of that, they're all multi-units. And my criteria to buy those units is that I have to be able to break even on the building without my portion of the building costing me anything. So my agents are in those buildings, and I have access to these 8 buildings, and they're not charged rents, but they have full-time access and the benefits of having local locations, which in small towns cannot be overstated. I mean,
right.
Just the only town Medicare office in that portion of the state is a huge benefit to them. And they get all the walk-in traffic in those buildings. And I talk to people all the time who pay exorbitant amounts of rent, or they don't have an office because they can't afford it. And our people are actually literally gifted that by just being on our team. So some of those things have made it easier for them, which I'm sure has contributed to the fact that our agent success rate is still way higher than 8%, even after I changed how things were operating. But part of that is some of the built-in benefits of the overall organization that we've built.
Gotcha. I mean, I think that's so insightful too, because like I'll work with agents that are brand new to recruiting, let's say, or they're just starting to build out a team. And I know what it's like, and I know you do too, when you're first starting to build a team, like you feel like you need to scratch and claw for every agent that you work with, right? And like you have to make sure that they all are successful, and you have to make sure you don't lose any. And it's just this feeling of anxiety, right? That burden that you talked about a second ago. But what I've told them is like, listen, I mean, if you're having to drag them, if they have to really literally put them on your back to fill out a contract, then it's not a profitable ROI for you. Spiritually, mentally, financially, it's just not going to be a good fit. The industry average, like you mentioned, is 92% don't make it, but depending on the source, different sources say different things. Sometimes they say 90 to 95%, somewhere in there, don't make it. And that's the industry average. Like in the Medicare space, a lot of the carriers will put out data that says the average agent writes 5 to 8 apps a year, not during AEP, a year. And it's all because they have to do their part, no matter what you do as the upline, right? Like, that's true. There was somebody, I won't name any names, but like there was somebody in my group in the last 6 months that was posting things, and they were saying, well, if with my agents, we jump on a Zoom call and walk them through doing the contracting, that the second we send the link and blah, blah, blah. I'm like, that's not realistic. That's ridiculous. I'm like, if they can't fill out a contracting link, they should probably find a new industry. Like, and so I find it so refreshing that you shared that.
And in our nowadays with electronic contracting, the majority of those contract links just magically show up in their email. If they can't be bothered to reply and get that taken care of, that's a gigantic warning sign that they're not going to comply in the future either with mandatory training or changes or product rollouts. If they can't do contracting, that's just step one.
Right.
But we have gone kind of above and beyond on that. They get their new agent guide. They get their getting off the ground guide. Their go set up. Here's how to get licensed and get your AHIP done and your contracting and your insurance and set up your business entity. They get a guide. I'll give you that guide and all of that information, but I'm not going to be holding your hand and dragging you through it anymore. And we used to laugh because I had a couple agents, they would laugh and they'd be like, well, you're like our mom. You're like our little Medicare mom. And I finally got to the point I was like, I don't want to be your Medicare mom. I have mine that I'm responsible for. I don't want to be anybody's Medicare mom, but I'll be your Medicare sister. I'll hold your hand and be on the same page with you, but I'm not going to be your mother. And I'm not going to show up and make you do your contracting. I'm not going to show up and force you to do training. I have gotten smart and put the training where it tells me if they completed or not. I have gotten to the point where it does tell me if they open my emails. It does tell me who reads them. I do have a system that tells me if they went to their training and how long they spent on it. Our current training programs being updated to even tell me if they did the quizzes and what scores they got on them. So I'm starting to do some of that just to be like, when you call me back and you say, well, I'm not having success, this didn't work. And I pull up and I'm like, you didn't do your training. You didn't come on your ride-alongs. You didn't show up to any of your carrier training. You didn't put in the effort. I'll give you the entire path. And if they do what I ask them to do, they're going to be income stable and be able to survive in insurance quickly. But if they fight me every step of the way, I'm no longer going to, I just don't put up with it like I used to. Right. My biggest thing is like, if you just do what I ask, you're going to be fine. But as soon as I start hearing, well, I'm going to go do it this way, or I didn't do it, or, life got in the way. Life's always going to get in the way if you let it. That's right. I have a schedule that is crazier than most. I promise you that. But I get done what I need to get done to run not one business, but 5. So, and I get there. Everybody experiences hard times. And here's the thing I'll say about that. Insurance, if you've come from a hard place, you actually have a better chance of succeeding. And I believe that people who faced adversity do very well in insurance. I honestly feel sorry for people who've never had any adversity in their life, because they'll never know how awesome they can be. They haven't activated that drive inside them if they've never faced something difficult. And you look back on life and, I was diagnosed with cancer in my early 20s. It was probably the scariest thing that I've ever felt. I had a brand new baby, and the thought of leaving him alone was horrible. But it made me fight hard. It's probably why I'm here. If I hadn't had Jonathan, I'm not sure I would even be here, because it gave me a fight or a level of fight that I might not have had I not had him yet. Right. But here's the thing. Nowadays, I'm not scared of much. And I'm glad I got tested so early in life, in my early 20s, because I have friends that are just figuring out now at 45 that they're awesome, because they had lived this like cushy little mediocre life all the way until something really pushed them at 45. So I'm glad I got my feet put to the fire at 20 years old, because it sent me light years ahead of my 20-year-old friends. Right. I mean, definitely, like like it's just like they say, pressure breeds diamonds, and it just what doesn't kill you makes you stronger. I mean, they all sound cliche, but I heard somebody say recently that they were like, if something sounds cliche, it's probably because it's true, because you hear it all the time. You hear it all the time because it's true. Yeah. And I'm not out here like wishing cancer on any 20-year-olds, but but I hope you all find whatever it is that lights that fire, because I can look at my best agents, my agents that just blow me away every day. They come from hard places. I mean, I have an agent that when I met her was a CNA, and I snagged her from her CNA position, but she lost her parents at 13 and 19 and had to take care of her younger siblings. I have two other agents that came out of foster care. And if you've never experienced the U.S. foster care system, you don't know what adversity is until you see what those kids go through. And so some of my best agents come from the worst places. And I would tell you too, when you're out recruiting, never look at those people and think they can't do it, because I tell you what, if you've ever lived that lifestyle, you don't want to go back. They're my strongest people. They have a sense of motivation that my agents who have never been tested don't have.
Right. So, they've overcome so much already in their life that when they get punched in the mouth by a prospect, metaphorically speaking, of course, not literally, but like when they get someone hanging up on them, or they get a door slammed in their face, or they get rejected, or they have a chargeback, they can probably deal with it a lot easier than maybe an agent that hasn't gone through some shit.
Yeah, that's it. I honestly, I really hope that, you give those people a chance, because they've been the best people I've ever found. I'm more looking for their attitude. I love giving them a challenge, like right off the bat, and see how they respond to it. I'm looking for people who aren't afraid of every little thing, who are willing to like sacrifice their first year or so. And if they'll give me what they need that first year to be successful, I'll get them, to a level where they're comfortable and they're doing things like paying their house off. And I've gotten to the point where I'm good and comfortable, and it changes your world a little bit when you go and you meet your, retirement planner, and they're like, okay, you're good. You're going to, I can't imagine quitting right now. I don't want to, but it changed where I decided to focus, and I'm happier now helping my people get to awesome things. Like when AEP rolled around this year, we finished it all up, and we're in the beginning of 2021. And I had 2 agents pay off their house, and I helped another one buy a commercial building. And it's so much better to see these people that didn't think they could even do those things make huge strides. And so I'm proud of what they've accomplished. And I've got an awesome base of people, agents that I've had for many, many years. And most of them I've known for quite a long time. And even the brand new ones we've brought on, I'm looking forward to their successes. And I'm probably a little more hands-on than a lot of traditional uplines would be, because I'm going to sit down and have a full conversation. And if they'll just be honest with me and tell me their situation, I'm not going to judge them. We're all adults, and most people have screwed up their finances. Look, the world doesn't teach any of us this stuff. No. None of us graduated high school and were told how to build our credit perfectly, and how to get access to business loans, and how to get access to real estate. And one of the things that frustrates me right now is I see people online making comments about home ownership's impossible now, and those systems rigged and nobody can do it. Well, here's the thing. God's honest truth, the system is rigged. It is rigged. But if you know how the system works, you can actually control it. And I think the majority of people fall into a trap of being uneducated, so they're always on the losing end of the stick. And that's got to be a horribly frustrating place to be. And when I sit and talk with some of my agents, they're in this place where they're very much just in despair, because they're like, I've tried everything. It doesn't work. I can't get ahead. My parents had it easier. Maybe so. But our current system, you can get ahead in it if you make smart decisions. And just even trying to walk someone through, I was talking to someone the other day who has a 30-year mortgage, refinanced it, has good rates, but is sitting here thinking, I have 10 years left to work, and I just signed up for a 30-year mortgage. What am I going to do? And I sat down and I did the math, and I showed him how he could have that 30-year mortgage paid off in 7.5 years for the same money. And he's like, why wouldn't my banker tell me this? Okay, so let's think it through for a second. Why would a banker tell you that? It's his job to make money.
Their job is to make more money.
Exactly. A banker is going to call you in 4 years and they're going to offer you a refinance because that's how 30-year mortgages work. They're going to keep you in the refinance cycle. But if you're a Medicare agent, if you're an AEP agent, you want to have that house paid off in 7 years, you're going to pay as much principal only in those early years and put as much of that AEP money in principal only. And you're going to go around and get a HELOC, and you're going to take that HELOC and you're going to apply it in full to that mortgage balance. So you're going to push that principal only as far as you can. You want to get it to 17.3 years on an amortization schedule. Once you've gotten to that point, you're principal heavy, interest light. So then you're going to operate your HELOC as your checking account, and it's going to naturally dwindle each month. As long as you're net positive, even $2, as long as you're a positive number, that HELOC is going to go down. And HELOCs are calculated on a daily interest, not annual. So that loan's going to dwindle way faster. Those dollars are more effective. And then each AEP, you're going to put as much as you can towards the principal only. And you can actually eliminate that loan and save yourself. On his, he's going to save $230,000 in interest.
Wow.
And he's not killing himself making double and triple payments. He's not doing any of this like, oh, I'm going to make one extra payment a year. That's not going to help you guys. That's not big moves. That's save a couple of months off your mortgage, or maybe a few years if you're lucky. So sitting down and actually doing things like, oh, I'm going to put all your debts on paper and we're going to do an amortization schedule, and then we're going to figure it out. And this is who I'm going to have you contact, and you're going to go redo your finances. I've been able to actually keep my agents from going broke in this business and quitting. And that's the difference between how we handle people and how maybe some of the other uplines do, is we take I guess in my terms, I would say a holistic financial approach to getting them stable as quickly as possible.
Yeah.
So,
well, I love it. I love you. I love everything about you. And I think it's just so smart. And it's the financial education that people need to know about, right? That they're not taught in so many places. I want to be respectful of your time. Where can people best find you if they watch this interview and they just really, identified with something that you said? Like, what's the best way that people can get in touch with you if maybe they might want to talk to you about contracting, or whatever the case might be? Maybe they want to buy some guns. Where can people best?
Okay. Well, our main office line, 719-404-3202. Websites, AISmedicareandmore.com. And then on that main office line, you can reach us for any of our businesses. And they're always welcome to email me. It's info@AISmedicareandmore.com. So, and we're always happy to answer questions. I mean, I help a lot of people who are not on my team just with basic finance stuff, just because being self-employed, here's the thing. Between your best source of information is either going to be other business owners or Google, because it isn't something you can go look up at the library. You're not going to be able to get this information from your W-2 employed friends, because their finances and yours, not the same. You're not going to be able to get business advice from W-2 friends. If anything, they'll tell you to quit and get a real job. So my advice is never be the smartest person in the room. Find other business owners, ask them what works and what doesn't work, and take care of each other and build each other up. So, and even you and I, we're technically, what are we? We're technically competition, but I would answer any question you asked me, as you've answered all of mine too. So.
Absolutely. I mean, the way I look at it is, like, technically speaking, we're competition, but there's so much business out there that we can both not only thrive, but we can live in abundance, and it's not going to take away from either of us,
Yeah, we're neighboring states.
Yes, we are.
And we never cross over, and we're both doing fabulous. So help those agents out there, take care of each other. And definitely, if any of you ever have questions, give me a call. I'm on Facebook. You can find me on Facebook or on Christian's friends list or in Christian's group on Facebook. So any questions, I'm a pretty open book. So.
Well, this is great. And I really appreciate you taking the time. I know you're incredibly busy, so I appreciate you spending so much time with me and with the audience and sharing all of your knowledge and your expertise. And guys, if you enjoyed this video, feel free to reach out to Jolynn. Feel free to like the video too if you liked it. Comment your thoughts on the video to let me know what you liked. Let me know what you maybe didn't like. If you didn't like that I look like a ghost and I'm so bright, I'd love to hear about it. And hit the subscribe button, hit the notification bell so you're notified when we upload. And we'll be back next time. Here's to your success, guys, and your abundance. Thanks for watching.
Thanks, guys.